Good morning, everybody. It's August 27th, Friday morning. Just going to run through the morning charts here. Yesterday we saw gold pretty much just traded sideways for the entire session. It is trading between 12:30 and about 12:44, and that's where it's smack dab in the middle today. It's just trading in this range. It could go, you could see it around this time each morning we saw a trend go down, we saw a trend go up, and then it pretty much just flatlined for the day. So it'll be interesting to see what gold does today. Of course, we've got some news coming out around 8:30 in about 10 minutes, which could shift gold and the S&P up or down pretty sharply. We'll keep our eyes on that. As for the daily chart and intraday chart of gold, you can see gold continues to grind its way up, had that nice reversal candle here, and has continued to move up. It's now trading into resistance here, and I do think it's got room for another pop, and we might see that push up to into the 50s area, where we'll move our stops up into a more profitable position. And let me just pull into the 60-minute chart here. You can see this morning it's just starting to move up now. This is a 60-minute chart of gold, and this is yesterday's pullback. I mentioned yesterday morning that gold was in this channel going up, and volume was declining, and I said that there's a good chance when I want to take some money off the table up here, there's a good chance we'll get a pullback down into this support area, which is exactly what happened. We saw a sharp pullback, and now it's starting to round out and head back up. Hopefully we'll see this move into the 1250 area, 1255 if we're lucky, and at that point we'll move our stops to we'll see what the price action is, but we'll move our stops up either to 1235, which is more or less where they're set at now at our entry point, or we'll move them up somewhere into the middle of this range around the 1240 area. Now, as for the SP 500, yesterday morning I mentioned, got a couple charts here that might be a little confusing to keep an eye on, but here's the SP 500. This is the 24-hour clock, and I mentioned yesterday we had this move up through the night, this drift upwards on light volume, and I mentioned when we're in a downtrend and you see a drift up through the night, there's a good tendency that we're going to get selling the next day. And what it is it's the big money more or less letting the market go up nice and high, so when they sell the next day they're getting a premium for it, instead of just continuing to drive the markets down. They lift it up and then sell into that pop. So anyways, we had that happen a little bit before, a few days ago, and we saw this move up in the night, and then we saw it just get crushed the next day. And I mentioned in the morning yesterday that's what we're looking at doing. It's moved right up into a resistance area, and of course it's drifted up through the night, and I was going to look for a short position, which is what we ended up taking. So now if I pull up the intraday, the market internals, you'll get a good feeling, I think, here of what helped me kind of see that play. So if I'm just, this is the NYSE advanced decline line. I'm just going to move it over a bit here. So this is yesterday, this dotted line here. This is yesterday action starting, and of course it ran off for the rest of the day. Now what I want to show you here is I'm going to pull in the put call ratio, and I'm just going to move that over a bit. Okay, so this chart here on the left, it's kind of confusing, I'm sure, but this chart on the left here is the put call ratio. When the put call ratio it moves down and is into this lower red zone, it means the majority of people are buying calls. They're expecting the market to go up. So if the majority of people are expecting the market to go up, you kind of got to expect that there's a good chance it's going to go the opposite direction, because the majority of traders are usually wrong. So if we take a look on the advanced decline line on the other side here, when this advanced decline line gets over, I like to see it on 1750 or higher, but in a downtrend a lot of times it'll only tag the 1000 mark and roll over. These ranges, like this 80 range on the put call ratio, and this 1.12 on the put call ratio on the high side, these upper and lower ratios, they change depending if you're trending up or down. And in a downtrend, you'll notice everything kind of moves tighter on the NYSE advanced decline line, and they kind of adjust on the put call ratio to the upper end as well, because there's always more people doing puts in a downtrend. So the whole kind of range ends up trading higher on the put call ratio chart, and it's much tighter on the advanced decline line chart. So this is something I'm going to cover in a video, and I kind of explain how to adjust your charts depending if we're in a short-term uptrend or downtrend, and it's really simple to see. So anyways, what we had yesterday, put call ratio on the left, everybody's buying calls when the market opened up, and you look at the NYSE advanced decline line, stocks gapped higher, putting the market into an overbought condition. Both of those were saying sell the market because people are bullish and the market's overbought. And then if I pull in the SP 500 chart, you'll see the cursors move in sync on the chart on the right as well. You'll see the market opened up and it was right into this resistance zone. We had that drift up, and then I said, well, let's take a small short position. We could have seen the S&P 500 drift back up to around the 1700 area. I thought in the middle of this range it could have continued to go, which is why I wanted to scale in. Anyways, it pretty much just rolled over and it sold off for the rest of the day. It was a great quick trade. We're still short. We'll see what the market does when the news comes out in about 6 minutes, and we'll go from there. Anyways, that's it for now. I'll talk to you guys in the chat room. Bye bye.